Welcome back, my fellow traders. I hope you're all doing well and enjoying spotting candles in candlestick charts. In this particular video, we will talk about engulfing candles. Unlike the Marubozus or the hanging man or hammer patterns which are seen in isolation, in case of engulfing candles, we have to look at the preceding candles as well, which means the today's candle is to be read along with the preceding 2 or 3 or 4 more candles, and that is how we define the engulfing candles. And similar to the previous candlesticks that we have covered, these candles which are engulfing in nature also signify a pause or reversal of the ongoing trend. So without much ado, let's try to understand engulfing patterns along with the prominent variations which are often used by traders. So as you can see on my screen, we have two variations of engulfing candles typically known as a bullish engulfing or a bearish engulfing. And as the name suggests, in case of a bullish engulfing, today's candle is a long body green candle which is completely engulfing or covering the prior day's red body candle. And in case of a bearish engulfing, today's candle is a long body red candle which is completely covering or engulfing the prior day's green body candle. So as I said earlier, engulfing candles have to be seen in conjunction with the prior day's candle, and if you see a bullish engulfing candle after 3 or 4 red body candles in the past, that has more meaning and that will signify a potential pause in the downtrend or a potential onset of the uptrend. Similarly, in case of a bearish engulfing candle, if you see a bearish engulfing candle being formed after 3 or 4 green body candles in the preceding periods, it would mean that the uptrend is temporarily being paused, or it may also indicate an onset of a downtrend. So looking at this example on my screen, we have a bullish engulfing candle which was formed after 3 or 5 plus series of red body candles. The stock was in a visible downtrend, and after the bullish engulfing was spotted, the stock went into a uptrend, which means that the downtrend took a temporary pause and the stock started retracing back and started going higher. And in case of a bearish engulfing candle, the stock was in a visible uptrend, but after the bearish engulfing was spotted, the stock price stopped going higher, it consolidated and started entering into a corrective phase. So this is how engulfing candles can convey a lot of meaning in terms of when the trend is pausing or when the trend is reversing. Taking a few examples from stock charts, on my screen I have the chart of Lupin, wherein we saw that the stock was in a downtrend and we spotted a bullish engulfing candle which was accompanied by almost 2x or even more the average volume, and as expected the stock price started going higher and the bear phase was temporarily paused. Similarly, I have the chart of Piramal Enterprise on my screen on a weekly time frame. The stock was going higher, forming a higher top higher bottom formation, but when we spotted a bearish engulfing candle here, it indicated that the uptrend may temporarily pause and there is a possibility that the stock might enter into a downward phase, and as expected the stock price started correcting after the engulfing candles were spotted. Even though this particular bearish engulfing candle was not accompanied with huge volumes, the significance of the candle does not get nullified. Volume is an additional edge to the candlestick pattern. The candlestick pattern and the nature of the sentiment that the candlestick is conveying still remains the same. Volume is just adding another dimension or giving more weightage to that particular candle. So let's talk about a few variations of the engulfing patterns. The first one being a dark cloud cover. As you can see on my screen, a dark cloud cover formation typically signals reversal of an uptrend, meaning that the stock is in a visible uptrend and then we have a gap up opening in the stock price, but that price is not sustainable and the stock closes much lower than the open price, forming a huge red body candle. And noteworthy observation is that this particular red body candle is covering more than 50% of the prior day's green body candle. And as you can see, the stock went up it opened gap up and then it managed to close way below the opening price, piercing or covering 50% of the prior day's bullish candle. This is a typical formation of a dark cloud cover, which indicates that the bull run might be over for the time being and a bear phase might kick in. Taking the example of Piramal Enterprise again on a weekly time frame, if you notice this candle that I have marked here, the stock was in an uptrend forming a higher top, higher bottom formation, but we spotted a dark cloud cover, implying that the stock price opened gap up. It was not able to sustain that price and closed way below the open price, forming a huge red body candle, and this red body candle is piercing or engulfing more than 50% of the prior day green body candle. This is a typical dark cloud cover, and as expected, the uptrend paused and then the downtrend followed. So this is how you can look at the engulfing candles in conjunction with the previous period candles and arrive at meaningful conclusions. The opposite of a dark cloud cover is known as a piercing pattern, which means the stock would be in a visible downtrend, the stock opens gap down, but it closes way above the opening price, thereby covering or piercing more than 50% of the prior day's candle, which means that the downtrend may be temporarily over and an uptrend may soon follow. So as you can see on my screen, it signals a reversal of a downtrend and is an opposite of the dark cloud cover pattern. The stock is in a downtrend and witnesses a gap down opening. The open price was somewhere here, which was way below the prior day's closing price. This turns into a bullish candle, thereby piercing or engulfing more than 50% of the prior day's candle. It might imply that the downtrend is paused and an uptrend may follow. And looking at one example here of Piramal Enterprise chart again on a weekly time frame, the stock was in a visible downtrend. The stock opened gap down, but the candle converted itself into a piercing candle, which means it was able to pierce or cover more than 50% of the prior day's red body candle, and this candle was accompanied by almost 2x the average volume. And as expected, the downtrend took a pause and the uptrend followed. So this is how you can use candlesticks to your advantage and to ace your decision making in trading or investing. So folks, this is how you can derive meaningful insights from various candle formations, and by looking at these candle formations in conjunction to the prior day candle formations. And always watch out for volumes. If these candle formations are accompanied with huge volumes, never ignore those. And also, if these candlesticks are spotted on a higher time frame chart like weekly or monthly, never ignore those, because these candles on a higher time frame has a very high chance of a good risk reward ratio and a very high probability of success. So along with the other candles that we have covered in the previous sessions, you should also watch out for the dark cloud cover or the piercing pattern candles and see how the stock price moved when these candle formations were spotted. Thank you. So see you guys in the next video where we discuss some more interesting candlestick formations.